What that is fucking New Orleans. Like when you walk around there, it smells.
It's
we're
like,
talking
it's
about
like
New Orleans. Sorry, hard start.
New Orleans. It's
Just got
like
back.
Calumet City with great restaurants and a rager going all day long.
Then you might die. You might get murdered and end up in the swamp.
That's the Calumet City part.
You end up in Burnham Woods, or you end up in the Pacific, or the Pacific. Don't worry about my maps.
Well, eventually it becomes a Pacific.
Yeah, you'll flow through the Panama.
As a matter of fact, I shouldn't say that. I just sold a property in Calumet City like 2 weeks ago. We closed in like the nicest little neighborhood that I never even knew was there.
Yeah.
Right next to a forest preserve where there's probably people sleeping in there at night, but still, it was super nice.
It's probably people sleeping there during the day too, just under dirt. But
so we're back. Casting Couch, Rusty Putter.
I love it. The alternative location. I think it turns out all right over here.
Yeah, it's nice.
On the couch. We don't have to.
The sound. Yeah.
We actually have the good view going this way. We've got another little coffee setup over here.
Yeah.
Little bar and little training area that Adam provides for his vendors.
Yeah.
To use this kind of room to do some training and improve the professional skill set of the people in our industry. So
this is awesome.
That's
great. We got a fern wall coming. Have you guys seen these?
A fern wall?
It's like you put this box up on the wall and it grows moss and it like cleans the air.
Yeah. Fresh air.
Anyways, but what do we got today, Junior?
I think we got a little conversation with you where you said you might want to run for some certain office here.
I'm thinking about running for President of the United States of America.
I love it. Under the party, just the party
the
ticket.
Party.
Life of the party.
The party. We're gonna take the best of both worlds and just make it one party.
I love it. I mean, I think it's probably what we need, but really we need to address one of the hot button topics that I think all three of us are heavily involved in here, and that's this perception of a housing crisis, affordability crisis, homeowners insurance crisis.
Everything's a crisis now.
It is. I mean, I think it's because everyone's become desensitized to everything, right?
Yeah.
Kamala last night actually talked about people and their homeowners insurance and not being able to get homeowners insurance and these crazy weather events we've talked about from, some people call it global warming, other people call it cloud seeding, but it is what it is. And so why not bring in our favorite political pundit and
expert,
but also like a real advocate for home ownership, homeowners' rights, homeowners' protection of their rights.
Quality of home ownership.
All right, I like that.
The quality of home ownership and the benefit. Private property is the pillar of a free nation.
Of a middle class, to be honest with you. Yeah.
In a free nation, one of the defining characteristics of a free nation is that the people are allowed to own their own private property, whether it's land or things or whatever. And that is what created the greatest and largest middle class in the world. So I think today, what you had sent out in our email about what we're going to talk about today is a little bit of what creates a stable housing market. Kind of what do we need to do? What are some of the issues, right?
Yeah, I think the biggest problem that the average consumer sees or the average constituent or voter is this perception of not affordability, unaffordability, whatever the right word is. And then you just hear very, very big ticket items about how it's going to get fixed, right? One of the candidates, and you and I talked about this a couple of weeks ago. Hey, we're going to build 2 million homes a year. The United States hasn't built 2 million homes a year, except for 2 years in the last 70 years. You can't just all of a sudden triple production on that. There's a lot of incremental change that could be made that actually has a real impact on your ability to buy, your parents' ability to buy, your kids' ability to buy, and their affordability of it as well. And I don't know how else to really go through it besides just kind of dive into some of the greatest mistakes that have happened in the real estate world from a government perspective and how to combat against them. Does anyone, and again, apply pressure to your local politicians a lot of this stuff.
Well, actually RFK, whether you like him, hate him, or don't know him, he really presents some really great valid arguments. One of the things I've said for a long time, and most economists do, is that there is nothing that the government does more efficiently than what the private sector can do. All right. Government activism in anything is waste and errors. And the reason I bring up RFK is when he talks about what his solutions are, which are pretty libertarian, he talks about, we need to do this, that, and the next, but we need to do it in a way in which we figure out how to get the government out of the way. And why do I bring this up? My personal belief is that we're in the situation that we're in with a lack of affordability due to government involvement in our real estate industry, real estate finance, and it was often coupled with some activism to try to achieve social objectives of theirs. All right. And it has resulted, in my opinion, in harming the people that they've stated it was intended to help the most. So where do I come from with this directly? Right before we got started, if in 2007 during the recession, we were looking at a 40 and 45-year graph of appreciation prior to the crash. And at each time, there was some form of new government intrusion into real estate finance. We see a blip in that curve, and the rate of appreciation ticks up. It started with the FHA, which was created in the Johnson administration, Lyndon Baines Johnson. And we see this increase. An FHA is insurance on a mortgage that an actuary wouldn't write. It's government saying, yes, we know that it doesn't make sense, but we want you to write it anyways, so we will provide you this insurance. Creates a cost to us as a society, but it also puts more money into the market that shouldn't be there.
It's manipulating the market. In short, it's
Absolutely.
saying the market would not accept this appetite for risk, but because you're going to mortgage company, we'll say we'll back it up, even though we know you're probably going to lose money because XYZ, right? Which now you're creating in like an artificial market that now, once you've started that, you cannot stop that, right? Because it's just like taking steroids. I mean,
nailed it.
You cannot stop because now you have to keep injecting because the infrastructure is not there to support the level of risk that you're having people take. So eventually those cards will fall.
Sounds very familiar from insurance, like health insurance.
Yes, same thing.
Right? You constantly fight a small fire with a massive fire hose, and then everything turns into the crisis. And then you got to apply 3 times the volume to it. We were talking about, Tony's talking about the 2007 run up in appreciation and government involvement and all of these other things. The other thing we talk about too is the 2020-21 COVID pandemic and the Federal Reserve's involvement in buying mortgage-backed securities at a level that they've never bought them before, to the tune of an extra $1.5 trillion.
Yeah.
And then we wonder why in that period, we're reading through some of HUD's mortgage insurance fund information last night, why we see almost 70% increase in median house price between 21 and 23. Well, you also have 700% of the Federal Reserve's involvement there. All of a sudden, values are going to go up because everyone's buying because of the perception of cheap capital. That again, why did the Federal Reserve have to get involved? The entire private market withdrew from mortgage-backed securities during COVID.
Yeah, and it goes back further. So how to resolve it, though, we need to understand that, I know that every time I say that the government created the issue, right, leading up to the crash, you're going to hear these people, no, the banks were forced to do the things. But I have to say that what created the environment for B, C, and D and subprime lenders to even exist at all was that there was so much money that shouldn't have been in the market pushing it up that when you saw guys, they said, well, they sold it off, right? because when the rate of appreciation of the underlying asset is going up quick enough, it creates an opportunity for you to get in and get out that wasn't there. And we can make this small little rise. And all these guys doing it, the more that get in invites more because it's more growth.
Yes.
When the market imploded in the recession of 07, which is when it started, it was not 08, it was not 09, it was 07. The government took Fannie Mae and Freddie Mac into conservatorship. All right, they took them under their control. They were still basically 50% privately owned, but Fannie Mae and Freddie Mac are the institutions that package these loans and sell them to the secondary market and convert them into mortgage bonds.
And
right?
back them, right? So that they add the level, they remove a certain amount of risk by being involved.
So they're not necessarily insurability. They're more of liquidity, access to liquidity.
Sure.
Right. And they're like the clearinghouse, right? They
Right.
know what they can turn into a mortgage bond.
Mm-hmm.
So they set the underwriting criteria. If you pass it through them and they're going to be able to take it, they know that they can fund it.
Yep.
Okay. So when they took those agencies over and converted them into government agencies, initially the argument was that we are going to turn these back to private institutions as soon as we can get out of this and clear this mess up.
Did that happen?
No.
Okay.
We had sort
Shocker.
of a perfect storm. We had a Federal Reserve. I won't go into that, but we had sort of an activist Federal Reserve that kept interest rates artificially low for too long. It was with that combined with the constraints that were placed on mortgages, that you got to write this and you got to do this to try to be equal and equitable and all these catchphrases that we hear today. It made no sense for private investors to come and take them over. There were better options and better places for them to put that much money. So its system got worse and worse. So we get to the stage where when we have a real crisis like COVID, the government basically controls everything and they can make some huge errors, like what Tony said, and buy a whole bunch of mortgages, more than they ever have before, pump more money into the market than what's ever been there. And now we're left with this inflation, higher interest rates to supposedly try and tame it down. And the guy who gets squeezed is the middle guy and the low guy.
Yep.
The guy on top who owns a bunch of assets is loving this. They're making more money than they've ever made in generations.
They're also rooting for a crash. Like they're rooting for it, which may have to happen. Like I know that's a contrarian like comment, but what's so wrong with a crash? Like what's so wrong with a correction? Help me understand why the government has to stop it from happening, because when you do that, there is a price to pay for every action. Like if you don't let things fail on a minuscule level and you artificially prop it up, it will eventually fail unless.
I think that's the problem though, is there's not a allowance for that the minuscule failure. It's boom and bust, in my opinion.
Right.
And that was actually, the banking in the United States. So when we were founded, we didn't have a central bank. The argument for central banks was to avoid boom and bust. However, historically, if you look at the history of the world going back eons, central banks create as many, if not more or worse, boom and bust cycles than private banking does. I don't think we're going to remove the Federal Reserve from our economy. However, and I'm not sure that people are ready for this, I do think that clearinghouse that we have needs to be privately owned, because I think you will see smoother cycles of interest rate movement. You will see things that are more easy to maintain over the long haul. I do think it would create a fair amount of pain at first.
Yeah,
but
which is a good thing.
Is 2 years of real pain worse than continuing on this painful cycle that seems to only penalize the middle class and lower class people and keep them down?
Yeah,
which is great for Adam because he's going to be running for president. So he's got to bear this cross here, and he's got to be the one that's willing to hold the 2 years of pain. But I think the minuscule fails, and then the whole clearinghouse thing. So let's be clear here: Fannie Mae's quarterly profit in Q2 of this year was over $4 billion. Now, the whole flipping it back into private market, I don't think the government wants to really do that, because if you read some commentary, interviews and House testimony and all of this stuff, there's been some language out there floated that the amount of capital that it would actually take to sustain liquidity for Fannie Mae and Freddie Mac is
so bingo. So $4 billion sounds like a big number, okay? Yeah. But it's really not when you consider the amount of money that they've transacted. Okay, they've transacted trillions. So
give me a percentage.
You're making $4 billion on a couple trillion spent. Like you
can really manipulate numbers however you want to.
Exactly. It's an impressive number. It's like with realtors. The $1 million impresses them, and free, 2 words, $1 million and free are like the most impressive words to a realtor. All right. So like a lot of people, $1 billion is impressive, but when we look at it, so what can we do? Okay. What do you think we can do to resolve this?
Yeah, let's solve this whole thing right now.
I think, again, we should have probably said that disclaimer before.
Oh, yeah,
this is a personal opinion. This has nothing to do with my company, anyone else. It has nothing to do with Tony's company or Adam's company and any of this stuff. It's all for entertainment. But I really think that we need to sever it. If you have government involvement in housing and real estate and mortgage finance, then you just have a clear defined path of that. And then you have private market whatever you want, liquidity,
all of it,
entire involvement, bring in whoever, Wall Street, any other large money operations, and turn it back into privatized or, private market and government market.
Right.
Have a clear, a large line in the sand. I don't know.
I think we need to have a realistic conversation with our people. I don't see this happening. It would be great if we could see both parties get on board with this, because I think it benefits everybody. That's maybe not to their interest. However, the only reason that we have this government involvement is to do things that actuaries would not agree with, all right, that don't make actuarial sense. And the reason that we do that is to try to forward various social initiatives, either a certain people group, certain income level, and things like that. All right. So I think, if we were to put somebody in charge of HUD, that is to say, look, people, we have to develop some financial responsibility. None of this has any basis in what your background is, your race, creed, color, religion. Finances don't care about any of that. So we are going to take the same criteria and just apply it to everyone. We've had 50 years of social activism in finance in this country, and it's only served to make underserved communities and underserved people groups poorer. All right. So it's been a failure. If we go back to the laws of economics, more people will thrive. And I think that will need to be heard before people in the private sector and investors are willing to put their own money into it. One of the things that we saw, a problem that we saw in the recession, was there was so much government involvement. People were afraid big investors were afraid to do anything with their money because it was 100% subject to what the government and not the market would do. All right. And the only people who were making money then were people who were tied closely to the government and knew what was coming. That collusion needs to stop. And the people who are supposedly the ones in charge of our government need to place some pressure onto our Federal Reserve to have a more conservative guidance of our monetary policy. When we have things like our Office of Thrift Supervision, requirement to be in charge of the Office of Thrift Supervision is that you must meet some DEI criteria. That just doesn't work with the laws of finance. Merit and ability make a difference.
So that used to be, and I think what you're describing, the way I digest things is a little weirder, but I think what's happening, in my opinion, I'm looking at this from an insurance perspective, right? So the American dream, or like whatever we're about here, is you can do anything, right? Like it doesn't matter if you're smart enough, you can figure it out. No one's going to say no. Like some people are going to have to hear no, right? Like you can't just make things happen out of thin air. And and you took it to the socioeconomic level, but like, let me look at it from like an insurance risk level, right? So here's a harsh reality. We should not be building on the Florida coast. I'm sorry. Like that should not be happening, right? So, but we're Americans and we can do whatever the hell we want. So we're going to do it. Well, the problem with that is that the private market cannot charge enough money to offset the risk of another or even a little hurricane coming with a tidal surge of like 2 feet.
Yeah, self-insure. If you want to do that, self-insure.
So you're going to have to hear people are going to have to be told no. What is scary for the people in the markets is like, man, if you say no to like a Florida, like think about all the wealth that's on the coast of Florida. And most of it is not wealth that is wholly owned. It is financed, right? Like
that's the biggest piece. You said self-insure. The only way to self-insure is to pay cash.
You have to pay cash.
Your own money.
So here's the reality. Like if you go down that path of privatization, then you are going to have a serious pullback until the people have cash and they save up to buy things and they're not living beyond their means. I know that's not an American thing to say, but that is the solution. You have to take your belt in a notch. Our grandparents did it.
I think that's as American as it gets. And there's an argument. Well, then you'll have these big winners and these big losers.
Yes,
you will. However, it's been proven though that new types of winners will come out of that. People you never expected, and it has also been proven that to maintain someone's wealth, employment is required. So these people employ people and create opportunities where there was none before. Thomas Sowell is a fabulous economist. He's excellent. He works through, if you're ever interested, read some of his stuff about how markets evolve and benefit sort of everybody. Right now we're talking about Kamala Harris has a plan for $25,000 for new homeowners. That will absolutely destroy the real estate market. It's going to blow prices up by a lot more than $25,000.
Yeah, it's a zero-sum game. Like it is.
You're going to have people that will foreclose on these things in a few years because they really didn't qualify to buy the house. A few years ago, they had that credit. What the heck was it? It was for your car or something.
Oh, the electric vehicle credit, or that one? Or
no. This was like 10 years ago. This was during the recession, maybe 13, 14 years ago now. You got like an $8,000 credit or something
for a car,
for your used car. Yeah,
I didn't realize.
Oh yeah, it was something for junkers, like cash for clunkers.
Cash for clunkers, and it completely destroyed. Ask anybody in the car business about this period of time. It completely destroyed the car business for the next 10 years. They're still dealing with problems as a result of that.
You can't create artificial demand through free money. Like it doesn't. Then you're just going to take the demand from the 10 years moving forward, shove it into 4 months, and then what do you do? Because now you're talking about Kamala Harris, $25,000. Okay, so now everyone can afford a house. And we already have a buyer's market. Like, what happens? There's not enough inventory for that.
Well, let's spin it.
What are we doing?
Let's pull it back 1 second, because Tony said something, and Adam, the insurance approach. I wanted to run with this. So what Tony was talking about, the actuaries won't write, or they say this is an uninsurable risk in the private market.
Yes.
What does that actually mean? Let me give you a clear as day example. If you call me and say, "Hey Tony, I would like a conventional mortgage," and I say, "Adam and Tony, well, you guys had a foreclosure 6 years ago. Well, I want to put 30% down." I still cannot give you, because you had a foreclosure in the last 7 years, I cannot give you a conventional loan.
You have to go
with 30% down. But guess what I can do? Hey, you guys cool paying PMI or MMI, whatever HUD calls it? I can get you an FHA mortgage with 3.5% down, 3 years and a day after that foreclosure.
Yeah.
Makes no sense.
That is the real. So from an insurance perspective, what would you rather take? The 3.5, practically 0% equity position on a mortgage, or the 30% equity position on a mortgage because someone had a foreclosure 4 years ago?
Oh, wow. Yeah. I mean, what?
That is exactly it. So now we fast forward into let's jam 25 grand into a down payment assistance program. There are already, every state has a housing finance authority. There are programs available. Here's, HUD, their administrative budget for those programs, administrative budget, okay? $165 million.
Yeah.
So there's $165 million not going to actually help a problem.
Yeah. I mean, there's some job creation in there. That's what they would say. But
government job creation, right? Not privatized. So,
another example, and I don't know if you're still done with that one yet, but let's just talk real quick about flood insurance, because that is becoming a serious issue. And I believe that we might be like not funding the NFIP. I haven't kept up on the articles in the last week.
It's okay. We just print more.
Yeah, we'll just print more, which is what we're going to do.
Well, but that's what. So let's talk about exactly how that all boils, right? So we've talked about the proper coverage of NFIP, right? Well, guess what happened in 2022? HUD saw that NFIP was not going to have money, and they said, "Well, we'll allow people to get these private flood insurance policies that are basically you just pay $60 a month to that sticker,
someone in Bermuda,
the sticker on the door to have improper flood insurance, but we'll keep writing loans."
Yeah. And let's just so I know that there's an inventory crisis, but let's just talk about what a flood zone is. It is literally a map, a topographical.
It is hard to say.
Topography.
You know what we mean.
Yeah. That they took from a satellite. And if you are in a flood zone, you are going to flood. It is not if you're going to flood, you will flood. And it's just a matter of when, right? So if you're in there and you need a loan, you have to have flood insurance, which, by the way, is a government entity. The ones that, so Fannie Mae and Freddie Mac only lets you purchase NFIP.
No, you can do private on all of them.
Now you can do private, but used to be that, yes. Right? So now there's more money flowing out to these companies, but the coverage is absolutely terrible. In a basement on an NFIP policy, there is nothing covered except for raw drywall, and barely. Your stuff's not covered down there. Like, you're literally getting nothing, because why? They know it's going to flood. So just don't buy there. Don't build there. Don't buy there. If you're going to let people do it, you're going to have to subsidize when a loss comes, which, by the way, all hurricanes that hit, there is almost no wind damage because the water is moving these houses away before the wind even gets there.
What came first, the wind or the water?
That's the thing. And it's like, no, dude, a wind does not pick a house up and move it. Water does that. So I say all that to say, like, we're just looking at things where we are taking real market risk that the private sector would treat a certain way. And because it's the United States and we can do whatever we want, we'll say, forget that. The government will subsidize it, which what that really means is you guys are paying for it when it comes to like fruition, that risk happens. Foreclosures, storms, floods, like that stuff is all, if you want to keep developing and doing that in places where you shouldn't, it's going to happen. So who's going to pay for it? That's the thing.
Well, and to get there, a couple of things that we need to have is we need to have power players having these conversations with the people that control these things. I harp on it often. A big problem that we have is the Realtors Association. You say anything about trimming FHA back and they start to lose their minds. They've actually been a big proponent of most of these social programs. They're
absolutely
big on CRA, and they refuse to face the fact that these programs have done nothing but harm to the economy and artificially inflated it. So if you're on a realtor's board or know people that are active in that, I would encourage you to ask them to have these conversations with their leadership there. At some stage, we have to pass it up to NAR. The National Association of Realtors has a big, big, big impact on our policy and our legislators. For a long time, I don't know if it's the case, we were the most powerful lobbyist body in the United States of America.
Yeah.
Okay. So have this conversation with your realtor, especially if they're, you see these guys, Realtor of the Year, or they're the president of their association. Ask them about these things. I tell clients all the time, Realtors Association is tired of hearing from me. They need to hear from you. The other thing is sort of our local elected officials. I'm from the southern suburbs, And we have seen government activism absolutely destroy the immediate southern suburbs over the course of 50 years. These were thriving communities. Now they have super high taxes, low property values, and they're filled with crime. And the people that live there oftentimes are just begging for more. It's like they're addicted to a drug. At some stage, we have to have strong leaders that can explain to these people the reason you are in this position is because you've been hooked on the steroids and it has to stop.
Yeah, it's got to stop. I mean, you can't just look at the property taxes. I mean, that's where it ends up, right? The money gets stolen. We can go.
However, if we were to take the expense that we lose through funding a subsidized real estate finance market and take a quarter of that and put it into programs with real financial economics courses for the people, the children, the whatever, teach real finance. You don't need to have the blessed parents with the great job and whatever. If we have some function where we've got real financial people in there, and hell, I'll tell you this, a lot of these people would do it for free or for cheap if they thought it could help things.
Yeah.
All right. So we've got to get government out of this and at least find some path to get them out. There's nothing that the government does more efficiently than what the private sector can do. And we all pay for the cost associated with their activism.
That's it. That's the campaign slogan right there.
I don't think that that's a winning campaign. So part of the problem is
it's not.
Take the government out of it.
we can't, to win today, if you're going to be in, if you're going to go for elected office, how you win is whoever's the best Santa Claus. Best Santa Claus wins today. If you were smart and you didn't care about morality, you'd really get up there and say, everybody gets a 2,500 square foot house and a Ferrari. All right. And you'd get in. I don't know how we.
Is it a red Ferrari or a yellow Ferrari?
I don't know. I don't know how we shift this conversation, but as long as we have people groups pitted against each other, and people taught that it's some other person's fault and other people groups' fault and not the government, which is what they have us thinking now. All right, that's a very difficult conversation to have because it becomes, oh, well, you're a part of this class or you whatever. No, get rid of all of that. Actuaries don't care about color, religion, anything. They're looking at statistics, rates of default, what is probable and what is not. And if we can instill these things in our young people, in our people, and get the government out of our real estate market, we can have much more wealth building for middle America and lower class America.
So we're gonna go teach classes.
We've talked about it.
We should do that.
And I want to, and I've been meaning to try to get in touch with somebody at local schools, and I'm going to follow up with that. It was one thing that we did actually when I was at Harris Bank. We had a component that we'd have to go speak to people, and that was a really good outreach program. You can pick up a lot for the community based on that.
More to come from that.
Yeah, again, people here willing to provide that education to younger kids. I mean, I was talking to you yesterday about a customer that quote straight up said, "Hey, I went and bought a Jaguar with my wife's mom's inheritance, and now I can't afford to buy a house."
But you look good though. I mean, going through the Dairy Queen.
But that's the problem. Is like there's these Instagrams, all of these people, these influencers, they don't have to put their balance sheet out there.
Yeah, so we can't force housing creation unless it's the government that does it with their money, which is going to be an inefficient expense. The best that they can do is get out of the way and create an environment. So for us moving forward from today, we're obviously not in that position. It is wise for everybody to get together some form of household budget. Get your goals clearly defined. Whether your goal is you want to buy a 60-foot yacht, or your goal is you just want to have a house and a car and pay for your kids to go to school, get that defined, get what it's going to cost down, understand where you're at, assess the budget, and figure out what it's going to take to get there. And then don't give up when I'm not at this stage. We have clients who talk to us often. They know that they want this type of house and they don't qualify. And I will look them dead in the eye and say, well, you need to make more money.
Yeah.
And it's like they never even contemplated that. Right? You are not stuck in your position.
Yeah,
okay?
you can actually think for yourself. And this is like, so a positive spin on all this, and I don't know how much longer we need, but positive spin being, if you have young children or you have the ability to influence young children, think about the leg up that they will have, because all of their peers are not getting this education. If they have it, imagine how much more fruitful their life will be. I mean, do it for yourself. That's fine. Cool. But if you could teach a 7, 8, 9, 10, 11-year-old how this actually works, like what a personal economic model is, think about how much you're going to set them up for. And that is free. You can get that education for free, $99, right. Free.
You may need to make more money. You may need to save more money.
Yes.
It seems like we always come back to this. Harder. You need to have a plan. You just need to think about it. We can help you with that. All right. Tell you what these real stumbling blocks that you're going to face are, so that you can be prepared to hit them. I don't know that we're going to resolve the real estate market anytime soon, as long as we have this division and a push for sort of government control of everything. You know, we were not supposed to be created this way. Well, we weren't created this way. We're not supposed to behave this way. And that's with intention. And if you want to have a really good basis for why we were created the way we were, I highly recommend you read the Federalist Papers. The Federalist Papers are a series of collections of writings of the arguments by our founding fathers as to why we needed to be founded the way that we were. So forget about the Constitution. What was the thinking behind it? And that can be found in the Federalist Papers. And if you have a strong grasp of that, you can have a strong grasp of how our economy should work, how you should run your own economy, and how you should take advantage of the freedoms that have been granted to you.
Yeah.
Amen. I think if we wanted to look at, since we know the bigger fix is a massive fix, if we're looking for some incremental change here, things that we can fight for, things that you can press your representative or your senator for, one of the biggest ones right now is this trigger lead bill. So look at this, TransUnion, Equifax, Experian, right? They all get to sell your data to data aggregators regarding your credit habits, your credit inquiries. There's a website, I think it's optoutprescreen.com or prescreenoptout.com. You can go there. What that will do, and you register there to electronically opt out for 5 years, it is going to stop when you call me for a mortgage and I pull your credit. It's going to stop you from getting 150 phone calls from, quite frankly, dog shit mortgage companies that have no face, no presence in the marketplace.
You've become prey.
Yeah, they're like, there's blood in the water.
Exactly.
But then they do that, right? So the other thing is it stops firm offers of credit. So now you're also not going to receive those BS OneMain and all those other loan fix things.
They come with a credit card in there that you could like use,
or just an actual check made out to you and you cash it. And it's like, well, guess what? It's a 32% interest loan, but they don't fall into those things, right? So again, there's 2 bills out there, one in the Senate, one in the House. Get on your senator, get on your representative for getting those passed, because again, large corporations get to manipulate the system and control you. I think that's one of them. And we could probably go on for days about the Department of Justice and the NAR settlement and how they reverse.
If you know a realtor, mention this to them. You know, the Realtors Association has supported every government intrusion into residential real estate finance that there's been. All right. If you feel like there's people getting loans that shouldn't be getting loans and it's artificially inflating the market, tell your local realtor and ask them to raise that to the board or provide their board's contact information. You know, very few people, I had this issue with a client. You know, we had a major issue and I said, look, the deal is you need to make the complaint to the Realtors Association. They're not going to listen to me. All right. I'm one squeaky wheel in the room. However, when the consumer starts to push back and say, you know, this is unfair, this shouldn't be happening, you know, then they start to speak up. So that's a big one because everybody knows some kind of realtor, right? There's a zillion of us out there. Voice your concern to them about housing and don't go for these plans of like the government can fix it. The government cannot make 2 million houses happen. The fact of the matter is materials have gone up in costs. Labor has gone up in cost. You can't build at affordable levels. All right. But if we change the economy to create more freedom in it, more opportunity for private capital to come in, then we can see competition and prices come down.
You just figured it out.
Competition.
Yeah. Competition.
You can't compete with the government. That's really what it comes down to.
Failure is good too. Why don't you just go ahead and fail? I mean, just fail.
I'm on my way. You should see my last 2 months production. It's been fantastic.
You sound like my high school guidance counselor. Failure's not that bad.
Failure.
I don't know, anything else on this?
I think that's great. I mean, we could talk for hours on that stuff.
I think we have been.
We always come back to the same stuff. It's like, listen, get a plan together. Be smart about stuff. Like, try to like put a screen up on all the stuff that's going on. And what it really comes down to: do you know what you're doing? Do you know where you're going? Do you know?
And also get involved, though. I mean, we really can't because we're considered professionals in the industry. Adam calls a local guy, makes a complaint with a politician or something. It's that's to benefit his insurance agency. With him, he just wants to write this. Okay. But if you're just a regular guy, you're a plumber, you work in a corporate job downtown. All right. What you have to say makes a big impact. So establish a plan and take part. I mean, this is supposed to be our government that we control, right? Speak up for yourself. It benefits all of us.
True that.
Anything else? You said write out the goals. That's the biggest. Literally write them out. I walk into Adam's office. He's got goals written on that board, goals written on that board. Tony, I'm sure we walk into your office. You got goals written out. I got goals written out. You write them out. It makes it easier. Write that budget out. It makes it easier.
I used to keep little toys around, like little cars and motorcycles and stuff that I wanted, and like a picture of a house. And then I bought all that shit. And then I don't know. so I need to buy some more toys, I guess. Like little toys to put in front of me, something to achieve.
I did just I sent a small Cessna to your house. So.
I think I'm going to put my NIPSCO bill in front of me now because this last month here. Maybe the
AC at the middle of their house been cooking.
Covering that is
stop cooking with gas, man.
Here. So thank you everybody. But get on top of it. Make a plan. If we can help you out, this is what we do. You know, all of us have had some form of loss and achievement. And if you can use our losses and wins to your advantage and apply them for your life, that's a win for all of us.
True that. Who dat? True that. Who dat?
Who dat?
Who dat?
Yeah. Adam at adamismyagent.com, right?
Yep, that's
Tony, we can Google you. We can spell your name wrong. We can still find you. You guys get me at applywithjr.com. That's about it. We'll wrap it up. Who day? Adam, you got any?
No. Go Saints. Who they play the Cowboys this week? Let's go. I'm a new Saints fan, by the way. Die hard.
The Calumet City Saints. Yeah. Tony, anything else on the way out?
No, that's it. And I'm going to go write a ridiculously low offer.
Perfect. In which case, we'll say a prayer to the agent that's receiving that.
Hopefully that seller guy's not watching.
Have a good one, everybody.